Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, where we saw a strong day for stocks heading into a key CPI report coming tomorrow, Ken. So it could potentially be a make or break for this rally attempt, depending on the reaction. What do you think?
Well, I'll tell you, the way the market is acting, Ali, it's pretty confident that inflation is on its way down. Of course, we have to wait and see what the consumer price index shows tomorrow. We're going to get prices for January that are expected to cool from December. But just looking at the way stocks traded today, ended up near session highs. Not a lot of volume behind the rally today. But let's start by taking a look at Nvidia, NVDA. Just want to revisit this one. And also a couple of industrial plays, Rockwell Automation, ROK, and Illinois Toolworks, which is in an industry group that is very well represented, I should say, in the big cap 20.
Fantastic. We will analyze those three charts, but first let's take a look at the major indexes today. So with the NASDAQ, a strong gain today, up 1.5% to lead the gains. We also had the S&P 500, Russell 2000, and Dow all up about 1.1% apiece. So Friday, we did see a continuation of the pullback, but a close off lows for the NASDAQ, a bounce off of the 21-day line for the S&P 500. And so a continuation of this movement higher today. It's looking pretty solid, Ken. If we could get a breakout above this trend line and a positive reaction on the CPI numbers, I think, like you said, I mean, strengthening the bull case here for the market, which at the moment seems to be pretty confident about what those numbers might be tomorrow.
Yeah, definitely. I think, again, the technical picture of the market, what we've talked about, the way the NASDAQ has come off lows in very, very strong volume, and then just look at the way it's pulled back. I mean, Friday, it was down for the fifth time in six trading sessions, but you mentioned it was able to, close off lows when it got close to its 21-day line. That decline has been in mostly light volume. So overall, we're still seeing a pretty good technical look to the market here. And as we've been talking about, lots of stocks are participating as well.
And when it comes to overall exposure, we were talking about on IBD Live this morning how today might be a day to do that, but to do it in a measured fashion, given that we have the risk that tomorrow might present with a little extra volatility. That's what we've seen with a lot of economic reports coming out, Fed-related headlines too. But Ken, it does seem like the discussion has pivoted from don't add exposure, don't step in front of a train that we could see to, okay, well, maybe add some exposure here today as long as you're managing your risk. Just know how much exposure to add and then see what tomorrow brings, and you could maybe add more or back away if you need to. It does feel like the conversation has changed a little bit around exposure heading into these events.
Yeah, definitely, and we talked about this on IBD Live this morning. So personally, didn't add any exposure today, but what we've been saying is that if this uptrend is really going to have legs, and we continue to move higher after little periods of consolidation, we should see plenty of stocks participating. And but again, I'm one before a big headline. It's almost like before an earnings report. You're going to buy a stock 1 or 2 days ahead of earnings, or you're going to buy a stock 1 or 2 days ahead of a key inflation report. Typically, I just like to let the headline let the headline come, see how the market reacts to it, and then you can make your decision. But right. I can see some people, maybe putting on small 2-3% positions today, so they're not, taking on a big risk. But I think generally, I'm a little more risk averse, so we'll see what the data looks like tomorrow, and then go from there.
Risk averse maybe, but when to put the pedal to the metal if market conditions warrant adding exposure in a big way. So we'll see what we get tomorrow, but that's why it's always good to prepare ahead of time to be able to react if we do get the best case scenario, so that way we can be ramping up exposure in this market if that's what makes sense to do.
Yeah, no question about it. We've been kind of saying right now 60 to 80% because we are in a confirmed uptrend. That could go a little higher, could go a little lower, but
Mhm.
certainly right now it makes sense to have exposure to stocks with just the very little distribution that we've seen in the market. And again, the way the Nasdaq just powered through that 200-day moving average, and now it's just kind of holding above short-term support levels here. Things are looking pretty good.
All right. Well, we'll see what tomorrow brings. And like we said, there could be a little bit of volatility. The S&P continuing to bounce off of the 21-day line after touching that level on Friday. So another solid setup day type action here for the S&P. So we're keeping tabs on that as well. Let's also take a look at the Dow, which had been lagging. It's still range bound, but it could be poised to either break above this recent rate trading range or below it. But either way, we do have a predefined range. And while this has been somewhat of a lagging index in 2023, it doesn't mean it's down and out for the count.
No, not at all. It's in fact we're still seeing, pretty good leadership among several Dow components, and this index itself is really setting up here. I mean, you mentioned the possibility of a breakout try over that 34,342 recent high that's been resistance recently. But again, if the market gets a number that it can work with tomorrow, we could see the Dow move pretty easily over this 34,000. 340 level.
Right. And similar to the S&P 500, but maybe just with a little bit wider of a trading range lately, we have IWM, which tracks the Russell 2000, also bouncing off of its 21-day line. It was able to hold above its highs from late last year, but the strong move higher, drift lower, and now a bounce. And we're seeing this pretty much across the board from all of the major indexes in some form or fashion, especially for the NASDAQ, S&P 500, and Russell here. So it does seem like we are all swimming in the right direction, Ken.
I think all these indexes they all look a little different, but they're all I think you'd have to grade their technical setups as pretty strong here. So with IWM, obviously that 200 price level has been resistance. It'll take some good volume to eventually get over that. But again, this has been a low volume pullback for the Russell down to the 21-day line. A good rally today. Again, not a whole lot of volume in the market today. Probably a lot of big guns out there, not wanting to make big bets ahead of the CPI data tomorrow. But I think all the indexes, you can say positive things about each one of them in terms of how they look technically.
All right, and now let's also take a look at the 10-year Treasury yield, which backed off a little bit today after clearing a declining tops trend line on Friday. Ken, your thoughts on what we might see for this as the week unfolds?
Well, we should see some movement one way or the other in the 10-year yield tomorrow once we get this data from the consumer price index. But yields have been moving a little bit higher. Again, there's probably expectations now that the Fed is going to hike one more time in March, and then is there going to be another quarter point hike down the line? So this 10-year note is really moving with kind of Fed. With what the Fed may or may not be doing, but it has moved off lows and it is back above its 50-day moving average. So the trend to me looks like it's up for now. It doesn't necessarily mean that yields are going to be soaring here, but we'll listen to what the Fed has to, or not what the Fed has to say, but if the inflation data tomorrow is what the Fed wants to see.
Exactly. All right, let's take a look at two sector ETFs. First, here's XLY, the consumer discretionary fund, up 1.5%. So outpacing the market gains, or at least, on par with what we saw from the NASDAQ composite. Also, XLE turning in a down day of performance here, still holding around the levels that it saw on Friday, which was a pretty big day of outperformance. Your thoughts on what we're seeing on a sector level?
Well, I wanted to talk about these two because again, XLE, jumped above its 50-day moving average Friday. There was a little bit of volume behind that move, and then it really didn't give up much ground today. So this is an ETF that I still think is worthwhile paying attention to energy stocks. There are a few subgroups that are still working out there, and the longer XLE stays above its 50-day moving average and moves sideways, think that this could see some more upside. And then the XLY, the discretionary, or XLY, the discretionary ETF. Just this was a nice move off lows, had some good volume, and now it's just coming down to the 200-day moving average and finding support here. So we're seeing a lot of individual stocks do this. We're seeing
Mhm.
ETFs, kind of coming through these resistance levels and then holding above them. So this XLY is showing pretty good price action as well.
Yes, it is. And let's take a look at a former chip leader that has made a strong move off lows. It's more than doubled since its mid October low, and that is Nvidia, up 2.5% today. Seeing a lot of buying demand coming into this stock since the follow through day on January 6th. But it's really been off to the races since then, hasn't offered investors too many opportunities to get in. Maybe this was a short, narrow cup here that traders could have gotten into on the 23rd of January in strong volume. We now have earnings in 9 days. So, what do we do with this one?
Well, again, earnings, like you said, in 9 days, but I just think it's very impressive how Nvidia has come off lows. We've heard a lot about these artificial intelligence stocks, and maybe a more speculative area of the market. But Nvidia, one of the reasons it's been rallying is that it is, very busy itself in artificial intelligence and data centers. And I see a weekly chart here, multiple up weeks in a row, and a lot of volume. So there are big investors coming into this stock. Now, you don't want to chase it up here, but this is a perfect example of just a stock that you want to just put on your watch list, because all the volume this stock has rallied in tells me that this still has the potential to be a leader. So just
Mhm.
going to wait for an entry here. Last week, remember David Ryan on IBD Live saying that just patience is such a good skill to learn. But I'm going to be patient with Nvidia, have this front and center on my watch list, and just watch how this trades for the next 2-3 weeks, and just watch how it consolidates, because this is a stock under accumulation. It is going to consolidate at some point, and if it does it in light volume, could easily see a new entry here.
Yeah, really coming back to life in a big way. And I think a really great example that shows how there's a time and a place to be in a stock. You see a prior uptrend, a pretty notable top here, a decline, some bottoming action, and its first base, getting above those moving averages. And now, okay, let's see if it can form another base and give us an opportunity to get in. So it's good to be aware of the different stages of the life cycle that a stock is in, and there's always a time and a place.
Well, and this stock is very interesting too, because I mean it's really a completely different scenario. If you look at AMD and
Mhm.
Nvidia, Nvidia has a very high relative strength rating of 89, and sometimes people will lump Nvidia and AMD in the same kind of group. They're in similar businesses, but Nvidia is the real leader right now. It doesn't mean that AMD is not acting well, because you look at the daily chart for AMD. Here's another stock that moved nicely above its 200-day moving average, and it's holding above there as well. So it's got, like I said, a much weaker relative strength rating than Nvidia, but this one's acting well, just not as good as Nvidia. But
Mhm.
I think you can watch both here for alternate entries.
All right. And yeah, we've been talking about how we've been seeing increasing strength in the chip sector as a whole and how great that is for a market rally and a new bull market to have chips participating. So we'll have to see if they can continue to do so as these quarterly reports continue to roll in. And moving on, let's take a look at ROK. This is Rockwell Automation, up 3% today to clear a large cup with handle base. Got pretty close to the buy point here, Ken. sure some would consider this one actionable. It didn't have above average volume today, but around that last earnings report, it did get some above average volume. And this is in the power equipment group. So definitely that industrial vibe, which we've seen a number of stocks in that theme looking interesting over the last couple of months. Maybe not your screamers off the bottom like some of the tech stocks over the last 4+ weeks, but industrial stocks have been, making a move over the last number of months.
Yeah, I mean, this is. I think the stock looks very good on the weekly chart, and then back to the daily, very close to a pivot here. And the handle, there was a little bit of a pullback, not a whole lot, but 294.21 looks totally actionable here. Again, up volume has kind of. Has been a little tame in recent days, but you did as it hit that high of 294, it did so in pretty heavy volume. It's got the accumulation distribution rating of B plus, so I would call this stock good chance here to make a move over this 249.21 pivot. The fundamentals are there. Just a big liquid industrial name. Clearly money flowing in this area of the market right now.
All right, and last on our list, we want to check in on ITW, a strong move sparked by its last earnings report, pulled back, and now bouncing again off of this 21-day line. Here's another industrial stock.
Yeah, and this machinery general industrial industry group, like I said, this is the group that's got actually quite a bit of representation in the big cap 20. I don't think Illinois Tool Works is in there, but you've got names like Dover, DOV, Parker Hannifin, PH, Train Technologies, TT. So I mean, the leadership is everywhere in this group. But if we go back to ITW, this is a stock that is doing. I like stocks like this that they break out. If you go to the daily chart for ITW, and you just see it's kind of retesting a buy area here. It pulled back, mostly light volume. There was a little bit of heavy volume when it initially started to pull back, but nice bounce off the 21 day. I think that 235.14 is the actionable pivot here. So this stock looks good. Just a retest of a buy area. Got a good composite rating. Annual earnings estimates a little on the light side, but overall, I think Illinois Tool Works is in a great industry group, and it's a pretty good looking stock here technically too.
All right, thanks so much, Ken. So as we look ahead to tomorrow, potentially a pivotal day, doesn't mean it can't be a quiet day. Maybe it'd even be better if it was a quiet day and the market just really shrugged off the inflation news, no matter what the number turns out to be. But no matter what reaction we get, what is your plan of action for tomorrow?
It's really going to be the same as it's been since January 6th, when we got that first buy signal from the market. Just looking through screens, looking at stocks that are finding support at key areas. Every once in a while, finding a stock that is in a well-formed base that's trying to break out in very, very heavy volume. So the crop of stocks has definitely increased, and you'd expect that in a confirmed uptrend that is showing signs of strength. But so that's my game plan. I'm feeling maybe a little bit under invested at this point, but it doesn't mean that not looking for things to buy every day. We're doing that on Leaderboard as well, and we're maybe 70% invested there. So market tide is flowing positive. So look for stocks to buy, but be discerning. Don't settle for second, third rate stocks. Look for the cream of the crop and the best stock in the industry group.
Sounds like a plan. And we will be back with more tomorrow morning on IBD Live to break down the latest market action to help you position your portfolio, depending on what CPI reaction we get, if we need to back away, if we need to add exposure, what we should do. The team will have guidance and a firsthand look at what they are doing with their own portfolios. So it's sure to be an interesting show. Investors.com/IBD Live for all the details there. We will see you there, everyone, and we will see you right back here tomorrow after the close.